Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. As we all know, the semiconductors have been absolutely killing it in the last couple of months. Since November, they have been going up. Since Nvidia started that whole trend AI situation going on, everything else has been going up. So what I would like to do today is check one of the best performing S&P 500 since November, let's say for the 1 year. So this company is up 90 something percent for the 1 year, which is absolutely ridiculous. So I'm going to give you information about the company, financials, estimates, valuations, and then I'll tell you my plan at the end of the video. If you like this type of content, please subscribe to the channel. Let me know if you have any questions. I do appreciate everything you guys do for me. So please just like that video. It will make a huge difference to the YouTube algorithm, as well as of course you can join us on the Patreon account where you get access to all the dividend trackers that we use, as well as the Discord where you can actually meet a lot of brothers who are sharing very good practices on daily basis, where they actually sharing the stuff they're buying, stuff they're selling, talking about the news and everything else in between. Right, so let's talk about this company, and this company is Broadcom. This is one of the biggest holdings I have in my portfolio. I've had this company in this portfolio for a very long time. I do remember the days where this company was so undervalued. I used to talk about it a lot. I wish I bought more at that time. So what I would like to do today is just first of all give you a little bit of information about the company, and then we'll look at the financials, we'll look at the estimates, and we'll look at the valuations, and then of course we'll look at my plan moving forward, inshallah. So as you can see here right now is up for the 1 year 90, almost to 5%, which is absolutely huge. And for the year to date, it's actually not bad, 12%. Everything else is like Nvidia's and all of them, they up quite a lot. But when it comes to the Broadcom, it's only 12%. And I say only 12%. If the S&P 500 goes to 12% a year, we're happy. That's basically the benchmark, if you like. For the last 6 months is up 48%, and this is the most important part. So since November these companies have been going up, so almost a 50% up since the beginning of that time. So what does the company do? So this company, I'm just going to give you a little bit of flavor of what the company does. First of all, as you can see here, this is the report that they made in fiscal year of 2023, and they had a net revenue of $35.8 billion. So they're not a really small company at all. And as you can see here, I like the fact that it's investing almost to over $5 billion in research and development. So just that 1 year, which is really good. Because the way things are going right now with the AI and everything else, you would expect this type of businesses to actually basically have some sort of AI within. And this is the reason why the company has gone up so much. This company came from all sorts of things. So they have two segments within their business. So they have the infrastructure software and they have the semiconductors. And over the years, these companies have come together to form what we know right now as Broadcom, and VMware was the latest purchase. So they've included VMware just now, and we'll talk about that in a second. So this is the revenue segment. Okay, so infrastructure software, which is now getting bigger because of VMware, and then you've got the semiconductor solutions. And the semiconductor solutions include networking, server storage, broadband, includes wireless, includes industrials, as well as million other little things. Mainframe, distributed, cybersecurity, storage area networking, and cloud infrastructure is also the software side of things. And when you look at this, basically this company in terms of networking, they have hands-on in terms of switching, routing, for example, physical layers, optical interconnected, Ethernet, and so on. The same goes for server and storage connectivity. So we're talking about here the enterprise, so different types of businesses, fiber channels as well. Again, basically RAD adapters. So any company that has their own data centers will use chips that this company creates. Any business that has its own connections will use basically devices this company creates. And then they also have the end-to-end, so the broadband side of things, end-to-end solutions, where you got all these devices that allow us to communicate with the internet and so on. And basically they sell all of these things. Okay, top of that, you've got the wireless side of things. So every single device we have these days have some sort of a chips that was created by this company. And then finally, you've got the industrial, automatic, automation, renewable, and automotive. So every single sector you can think of, solutions this company has something in it. Now the software side of things, we're looking at enterprise class solutions, okay, like we've already seen the mainframe, the mainframe, hybrid cloud, distributed security, identity management, and payment security. So it has hands-on everywhere else, and now they bought VMware hybrid cloud portfolio, which has its own basically set of basically products that they provide. So it really is one of the best companies and well-diverse company, in my opinion, out there. This company and Qualcomm have a wide range of products that they basically provide to every company out there. And as you can see here, the revenue side of things, it has been growing from since 2019. We're looking at $22 billion, 22.5 to right now $35.8 billion, which is absolutely huge. Gross margin basically about in the 70s, and adjusted EBITDA of $23 billion right now, and free cash flow has been increasing every single year from $9 billion to $17.6 billion, which is quite nice. Now when it comes to the dividend side of it, okay, which is one of the reasons at the time when I was buying this company, I was looking at growth company that pays dividends. So when I found this one, I was very surprised. So since 2016, they've increased that compound annual growth rate of 35%, which is absolutely huge, from $1.94 to right now $21, which is absolutely massive. Now looking at here, so we've got market cap of $574 billion. They pay 1.69 dividend yield. I remember when the dividend yield was almost at 3%. Now it has come down because the price has gone up. Okay, now in terms of payout ratio, only 46%. In terms of latest increase was 14%, and the 5-year growth rate of 19%, which is quite nice. In the last 10 years, about 36%. Okay, which is quite nice, which is what we've seen early. Now, as you can see, since 2016, they've grown this basically this massively. So 13 years of increase in that dividend. Right now, you will get $21 for every share of this company that you own. And looking at the dividend, there we go, the 5-year average. So the last 4 years that I've had this company, I've seen this company around, it was around 3%. So since then, of course, it has come down quite a bit because the price has gone up. So right now the 5-year average is 3.12 and the current is 1.69. So based on that, it seems a bit overvalued right now. And the forward PE, which is interesting, okay, the 5-year average used to be about 15, right now it's about 24. Right, even if this was 25, that's not expensive in comparison to Nvidia's, which is like in the 40s and so on. So it's really not that bad. I think Qualcomm might be around the same or slightly lower. I've got a video coming up for Qualcomm as well, so watch out for that one. If you haven't liked the video yet, please do so because it really helps the channel. So now looking at earnings payout ratio, as normally we say 50%, right now it's about 42%. Free cash flow payout ratio of 35%, normally we say 50, which is nice. Earnings per share has grown from $4.90 to right now $50 per share. Free cash flow per share is also growing up in the right direction from $3 to now $60, which is absolutely huge. Shares outstanding, they have been diluting the shares, and they have actually diluted this year because, of course, they were they buying VMware. I'm sure they've used some of that money, which is not bad for me. Like the fact that the revenue that's going to come from VMware will cover that. I'm not really worried about. So in maybe next couple of years, you will see them buying back again. And total sales, you can see here from $4.27 billion to right now $38 billion. And return on equity, right now 25%, on return on invested capital of about 10%. Operating margins of 40%, a free cash flow margin of 49%, which is absolutely huge. I don't think there's that many companies that sort of have that sort of a margins. Net debt to EBITDA right now, it's above that 1.5, but it's not huge. It's 1.98, so it has come down from previously where it was. So I've absolutely got nothing to worry about when it comes to that debt level. One of the other things I like about this company, if we go to the financials and go to statements here, this is the total revenue. So from since 2014 to right now where we are at 2023. 2023, basically the last fiscal year. So you can see every year was growing. Okay, the cost of it was 1.9 billion to right now about $10 billion. Okay, But look at this, the gross profit, which is absolutely that 70% that we've seen already. That's absolutely huge, and I really like this because I don't like companies that spend so much of basically whatever they make in is basically closer to the cost of that revenue, and the net income isn't that much. Whereas this company is about $26.5 billion of that 35 billion is actually gross profit, which is really nice to see. And then that means they will have a nice net income, which then of course gives us excellent free cash flow. So if I show you some of the free cash flow here, I like using Yahoo Finance for the free cash flow, so I'll share that with you guys in a second. And as you can see here, from $11.5 billion to right now $18.3 billion of free cash flow, which is absolutely huge. So it has grown every single year for the last basically 5 years, and I really like that. This is one of the reasons when I first invested in this company. Of course, that dividend was really nice and so on, but of course it is a company where basically they don't have a lot of costs associated with that, making that revenue. Now looking at the earnings expectations, so if we move on to the earnings estimates, right? So 11%, almost 12% next year, and the 2024 this year. Then next year, so almost to 22%, and then 13%. So if we just focus on these nice double digits for the next 3 years, and the revenue side of it, look at this 40%, and I think a lot of that comes from VMware, of course. Okay, but the following year it balances again, so 13.5 and then 9%, which is absolutely fine. That's nothing to worry about. Now looking at Yahoo Finance, as you can see here, next year they're expecting about 21% growth, then 14% every year for the following 5 years, which is absolutely fine. Now one more thing we need to look at here is the ratings. So we're going to go to Wall Street and see what they saying. So 20 buys here, 20 strong buys. Wow. And 7 buys, 7 holds, and 1 sell. So right now it's about 17% upside from where it is. They say in $1,494 per share. This is increasing. I think it was Barclays that actually said today they've actually increased it to 1,400. So Barclays came out today and said it basically it's a buy rating for them now 1,400. I think that's the price they said. And now looking at Morningstar, as you can see, just 2 stars here, 14% premium according to them, $1,090 per share is where they think the price should be. The company has a wide economic moat. Looking at basically the past, so looking at the total return in the last 10 years, you can see about 35%, which is absolutely huge. So finally, I want to show you what I think about the company moving forward. Okay, so this is Morningstar valuation, this is Seeking Alpha, this is my discounted cash flow model, and then simply Wall Street. All of them average it out, you get $1,293 per share right now. Right now is $1,259 per share. That's about 3% difference. And again, if you think this company is very risky, you might want to take 10%. Okay, $1,164 per share is where you think the price should be moving forward. And again, that's not unrealistic, okay, because we can see a correction and then that might happen. But if you say 5%, okay, use 1,228, and that can be just in a couple of weeks. If a couple of days, it can go down because it seems very volatile recently because it follows in whatever Nvidia is doing. Supermicro and basically this company is almost following Nvidia like for like. So it will be interesting to see what happens. So what is my plan? What is my situation right now? I've actually trimmed this company not long ago, and when I did that, I can't remember what the price was. Let me just quickly share that with you guys. So this is the trims. That's the 2 that I've sold. It was $1,130 per share at that time, and I made about £1,000 off that sale of the 2. Now I'm not selling anymore. I'm not buying more either. Okay, I'm gonna leave it alone. There are other opportunities. So right now, if I buy more, that means I'm averaging it up, where I have other companies, other opportunities that I feel like are better moving forward. Inshallah, this company is great. I've done well, alhamdulillah. I'm gonna all hold on to my 5 companies, 5 shares, and that collected that dividend. So the recent dividend I've got from this company was almost £25. So I'm gonna keep collecting that dividend and just leave it alone for a bit. If it comes back down again, then of course I'll look at it again. But right now, trading around these prices, where my actual let me show you, I think it was 400 something, my average $483 per share. That's absolutely ridiculous. I'm not paying over that much. So I'm going to leave it alone, inshallah. And of course, if something changes, I'll let you know what happens. that's all I wanted to share with you guys today. And like I've always said to you guys, do your own research, find out a bit more information. You might completely disagree with me, by the way, and that's absolutely fine. I'll really genuinely appreciate that. And of course, do your own research, have your plan, and this is just for take it for as a bit of entertainment, hopefully a bit of information, and just take it from there, inshallah. Have a wonderful day. Assalamu Alaikum.